Mortgage rates have come down significantly in the past week. They went to 6.3% for a 30-year fixed and 5.75% for an FHA. So does that mean it's a good time to buy? Well, let's hop into it and see. So as a quick recap, just last year in October, we reached an 8% interest rate. And if you were going to buy a $400,000 home at an 8% interest rate, the monthly payment was around $3,700, where you needed about $120,000 to $130,000 to even have a shot at qualifying. So that locked a lot of people out of the market. But here we are now. What is that? 8 months later, it's come down to 6.3. Could we see 6%? Could we see 5.5? We'll have to pay attention and see what happens, but I want to break down the numbers for you now that the interest rates are around 6, what that would actually cost you. So let's say you're going to look at a $400,000 home. You put down 3% for the down payment. You're also going to need 3 to 4% in closing costs. You could negotiate that with the seller in today's market in some cases, but let's just for the sake of it say you're going to pay another 3%. So 3% down, 3% closing costs would be $24,000 cash up front to get in. And then a 6% interest rate would put your monthly payment out the door with property taxes and insurance at about $3,200 a month. So what would you need to qualify for $3,200 a month? About $100,000. Still not ideal, but it's where we are today, and it depends on how much debt you have. So again, as a reminder, your monthly car payment, your monthly student loans, your monthly credit card, and your monthly personal loans all work against you on qualifying for a home. So if you're able to pay your car off and save that $500 a month, that is $500 more that you could potentially get on your monthly for your house. So make sure to pay close attention to that. But where are we at today? With these 6% interest rates, what do I think is going to happen? We have to see if we're going to head into a recession. Because if there is tens of thousands, hundreds of thousands of layoffs, that could affect the demand when it comes to housing. But at the same time, all the people who've been sitting on the sideline wanting to get into a house but couldn't afford it at 8% or didn't want to take the plunge at 8%, now that they're seeing 5.75 or 6%, you can only assume the demand is going to go through the roof, which would increase the prices. But we still have to wait and see if a recession's coming. So that's what we have to wait and see. But if you are financially ready, now could be a good time to get back out there and start looking because you might find yourself a really good deal. So how do you know if you're financially ready? These 3 steps. Number 1, can you comfortably afford the monthly payment? Did you sit down and do the utilities, the property tax, everything per month? Can you comfortably afford that for the next 30 years? If the answer is yes, then that's a good indicator. Number 2, are you going to hold your home for the next 5 years, 10 years, 15 years? You don't want to buy today and sell 6 months from now or even sell 2 years from now because you could lose money. The closing costs, the moving costs, maybe some maintenance, then the closing cost to sell your home. You don't want to buy today and sell a year from now. You might waste all this time and all this money, but if you're going to hold the property for 5, 10, or 15 years, you should be in good shape and you should see some appreciation. And then number 3 is make sure you have an emergency fund, especially with this looming recession in the mix. You don't want to get into your house, do all of this work, all this time, all this money, sit on your couch, cheers on a glass of champagne with only $1,200 left in your checking account. At least have 3 to 6 months of bills, so God forbid, if you lose your job, you're not stuck or have to go into foreclosure. You want this house to be a pleasure, not a prison. So make sure that you're comfortable with the monthly payment. So the first step is I would talk to a lender if you have a relationship with your local bank, or you can do some research. You can even go to my profile or description and talk to my preferred lender. They work in 49 states, all of them but New York, and they can help you out, put a roadmap together and see what options in your city are available. And this way you can find a really good deal for yourself. So happy house hunting. Just keep an eye on everything, continue to educate yourself, and this way you and your family can make the right decision.